Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence. We're getting a bit of a lot of talk about Elon Musk the other day.
People are excited that Elon Musk said pretty much the same stuff he always says.
No. He had some new things to say. Okay, so Elon Musk, Jack Dorsey, and Kathy would talk at the B-Word event. And of course, Elon Musk said that he, Tesla, and SpaceX, which we didn't know before, all hold Bitcoin. Elon also said, which I just thought was interesting, was that negative rates in Europe drive him insane, and so he, rather than see a negative bank balance, he would rather move money into Bitcoin. Emily, what did you get out of it?
So what I find most interesting about this is that, of course, he said this and the market jumped a little bit, but it didn't jump that much, compared to some of his announcements in the past or even his tweets in the past. So I just wonder if the Elon Musk effect is wearing off a little bit.
Lawrence, you're the market expert.
I think people are kind of, I think basically, the markets, we could think that they might have bought prior to the event in anticipation of something big, but there also could have been some technical buying as well. So we can't read even too much into that rally. Prices obviously haven't fallen at all since yesterday. But we are we're not at like 36,000. And I think the market is kind of saying, okay, great. Elon Musk likes Dogecoin. Congratulations. Yeah, you own some Bitcoin. Yeah, SpaceX, sure, he'll mine he'll mine Bitcoin on the moon when he gets there. But at the end of the day,
he suggested that Bitcoin miners should be space heaters. So, and he also asked
and you know what?
Jack
He's right. He's absolutely right about that. They should be, it would be great if all these miners went out to places that need heat. There are a lot of public housing in America, in New York, where heaters don't work. It'd be wonderful if all these miners went out and installed them in homes and help people pay their electric, or not even have to pay electric bills for their heat. That would be great.
And it would be cool. And he asked Jack to let advertisers pay Twitter in Bitcoin, which would be interesting as well. But let's take a look at the crypto markets. Taking a look at Bitcoin, let's have a live look at the Bitcoin XBX index. The crypto markets update is presented by Grayscale, the world's largest digital currency asset manager. All right, the CoinDesk Bitcoin price XBX index is currently at $32,165. Bitcoin is up over 2% over the past 24 hours, and the CoinDesk Ether price ETX index is at 2002, over that 2000 psychological mark. ETH rising about 5.5% over the past 24 hours, and the new DFX, CoinDesk's DeFi index, is trading at 439, tracking DeFi. DeFi is up modestly about 3% over the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. All right, so fresh off a nearly $1 billion raise, the largest raise in crypto history, folks are posting photos of FTX CEO Sam Bankman-Fried, seen here taking a late night work break in his office, sleeping on the floor, as he's known to do. SBF adding a bit of color, tweeting, fun fact, the peanut butter and jelly on top of that fridge were absolute disgusting. They were extremely expired. The millennials are here, folks, the future of finance. Always a pleasure welcoming our next guest, Sam Bankman-Fried. Welcome, Sam. So we're seeing a bit of a bounce in Bitcoin. Are you making much of this Elon effect?
Yeah, I think it's really something. I mean, I think if there's one thing the last year has taught us, is that the Elon effect is real. Sometimes the bounces are real and sustained. Like, the Elon effect matters. And, if you superimposed a graph of Elon's sentiment expressed publicly towards crypto with crypto prices over the last year, I don't know. I think you'd really see something there.
Yeah. Okay. A bit of a difference in opinion from Emily, but FTX raising $900 million in a Series B round. Man, congratulations at a $18 billion valuation, all done within 2 years. Earlier this year, when Coinbase went public, you told us you would consider an IPO among your options. Clearly, you took a different route. So what led to this decision, and what do you plan to do with the money?
Yeah, I mean, spent a while talking with a bunch of prospective investors, basically trying to get a sense of like what the value add was and how valuable they would be as partners. And I think ultimately came away believing that they actually might be somewhat valuable. I think particularly when they really care about a company and are excited by it and want to help it, there's actually a lot that they can do. And we've already gotten a lot of really valuable introductions from it. So I'm pretty happy with that. And I think it also really helped us tell our story to a lot of people and get our name out there. In terms of use of proceeds, I think the biggest thing is probably acquisitions.
Okay. Acquisitions into.
There's a few types. I mean, Blockfolio would be one example last year, and there are others that could look like that. Other examples, there's some licensing and regulatory related ones. There are some sort of, ones we're looking at in terms of the user base and the product base that they pulled out to it. With the aim of, primarily building out, there's a few different aims. One aim is building out our user base with some of these that have large user bases. One aim is building out our license base in terms of what products we're able to offer. And one aim is, particularly firms that are very good at fiat and stocks and other assets that we don't have as much expertise with, potentially being able to add that on.
Sam, I imagine that a lot of this raise took place. I mean, fundraising takes a lot of time, so I imagine some of this happened before this China crackdown. So I'm curious how the China crackdown just sort of plays into all of this, because it's sort of widely known that FTX has a lot of China users. Are you just worried about this, right? You've just raised all this money, and China's kind of spooking the market. You have a lot of users in China. I'm just curious what you think about this.
Yeah, so, I mean, I think, first of all, it just matters because it affects crypto, right? Like, Bitcoin is down. And that affects you no matter where you are, if you're in this space. In terms of China in particular, no jurisdiction is more than 10% of our revenue. And so, while it is a relevant jurisdiction, it's not an overwhelming one. It's not anywhere close to, sort of a unlosable part of it. While I think we have a lot of Chinese users for a non-Chinese exchange, we don't have nearly as many as the sort of Chinese native ones do. And so for us, it's a real jurisdiction, but it's not an overwhelming one.
Well, I guess that's good to hear. It's getting more decentralized. Where are the jurisdictions? I mean, I'm just curious geographically, where are you betting on in the future? Are there certain regions of the world where you're looking at for growth?
Yes. So the first answer to the question actually is sort of no. It's or everywhere. If you want to approximate our revenue breakdown right now, the world weighted by GDP is pretty close to the answer. Like, it really is all over the place, and there really isn't any dominant jurisdiction. The only exception that I will give looking forward, not right now, obviously, but when you look at FTX US, there's an enormous amount of potential growth in the States. A lot of that has to do with the fact that, there just isn't nearly as much business going on there right now. As you would expect, given the size of the economy. A lot of that is regulatory. It's something that we're working on there, but I do think that there's huge expansion potential in the States for FTX US.
So, Sam, when your investors put money in, you had the great Easy Englander. Was probably one of the toughest people to ever get money to invest from. Did they require you guys to do more stringent KYC, know your customer, and AML, anti-money laundering procedures, given what's going on in Binance? Did they ask you guys to did they say, look, we'll give you the money, but we want to see some sort of plan where you guys have as stringent as possible all over the world, especially given what's happening with Binance's troubles in various jurisdictions?
I mean, we talked a lot with prospective investors about regulation. It was obviously a topic that was on top of their minds. And, I think honestly how this comes out is, it doesn't come down to like, here's the one policy that, one weird trick to be regulatorily compliant. And I think that's sort of not really what was going on with Binance. I think it's not what's going on with us. I think, we've had a pretty good track record. We've done what we can to work well with regulators. And I think it really comes down much more to an overall approach and a very, very large number of small decisions than to one high-level decision. We have an AML KYC regime. We always have. And, it's something we're always evaluating. But I think that sort of, that's always been a piece of it. And much more, I think what this comes down to now is all the various different ways that you try and respond to regulators across the world, looking for them, looking for guidance from them about what they want, what they don't want, trying to adjust based on that, pursuing licenses wherever we can, and turning off products for particular jurisdictions or cross sections where appropriate. And then, just always being responsive and accommodating when regulators reach out. I think it's way more of what's going on than sort of like one particular policy.
So tied into that, we've obviously seen the price of Bitcoin fall since China a couple of months ago put in place restrictions allowing banks or saying that financial institutions couldn't deal with crypto companies. So how are your Chinese users? You said they're just about 10%, under 10% of your user base. How are they able to get their funds onto your exchange or off your exchange, given the restrictions that China now has in place?
It's a good answer. The answer is crypto. So we don't touch onto our RMB. We never have. That's a very, very difficult thing to deal with, especially as an outsider. So what were you going to say?
Does that tie into the KYC and AML issues that you have? What kind of things in place do you have for their customers?
Yeah. So I mean, we run AML KYC like them, like we do on everyone else. We check databases like everywhere else. We do on-chain KYT to make sure there aren't marked addresses involved, and go through the standard procedures with them, like with everyone else. And then, we know that there's a lot of sensitivity around RMB and around, domestic currency. And China is not the only country that has that. There are a number of jurisdictions, including Korea, and parts of Southeast Asia. And, we generally don't, take deposits or withdrawals of those currencies. It's, that's a hard business to break into. It's one where you need a ton of local, expertise and regulatory clarity and relationships. And so, that's not the piece of business that we want to be involved in there. And,
Tether was on CNBC. Their CEO, JL Van der Velde, and CFO, Giancarlo Devasini, don't talk to the media. But their general counsel says they're really responsive to their clients, and especially you. They've specifically mentioned you. So I'm curious, what are your dealings like with the CEO, JL, and CFO, Giancarlo? Do you have confidence in them?
Yeah, I mean, we've interfaced with them a fair bit, Giancarlo in particular. It's there's tales and tales and tales that everyone could tell about Tether and about Bitfinex, many of which have been told, some of which haven't. But in the end, they've been productive partners, and I don't want to sort of speak in absolutes here. I try not to do it.
Do you have a deal with them, a particular setup, or do you receive a discount?
I mean, there's no sort of like weird bespoke deal here. Is there a sort of, in business that everyone has a setup with all their counterparties, but it's just sort of the typical one. And I think a lot of this is I have created and redeemed a lot of Tether in my life. I've tested that system. It does work. It's not the most streamlined system. It definitely isn't. And I think what that leads to is when you look at primary market liquidity, the issuance and redemption, a lot of the onshore stablecoins like USDC have more primary market liquidity. They're just cleaner, they're simpler, they're cheaper and faster to create and redeem. On the other hand, there's a ton of secondary market liquidity for Tether, much more so than for others. And while it's not always extremely fast or cheap, to do so, we have been able to create and redeem Tether regularly. And so I again don't want to speak in absolutes here, but can say that when you look at the enormous growth that it's had, that has been fueled by bona fide creations with bona fide dollars flowing into the system based on bona fide demand from customers across the world to move more money into Tether. And so, the system as a whole does appear to me to be, mostly functional.
So, Sam, when yesterday in that CNBC interview, when asked about their commercial paper. They refused to divulge where it was and its location and everything. But interesting to note that when they talked about the commercial paper, they referred to it as commercial paper issued by their partners. So are you one of those partners who issued commercial paper or any sort of debt instrument or any sort of equity to Tether or Bitfinex or iFinex, and for any reason, either to receive Tether or otherwise?
So I will say no. I'm not. I do want to sort of make a note that I don't, in general, want to be sort of in the business of necessarily always, talking about this, because it's often important, I think, to our counterparties to have discretion and for us to respect their privacy. But I think in this particular case, I can say no, we are not. I don't know for sure who theirs are. I don't have enormous details on that.
So how do customers get their Tether? By the way, if they're buying Tether using RMB that gets onto your exchange, do you know how they purchase that Tether?
Well,
using
we don't
renminbi?
take RMB. So
no, you don't. But does it come ultimately from Chinese customers to FTX?
It comes from a lot of different customers, and it's not always easy to tell where it originates because of market makers. So what you'll often see is there's demand in general for Tether. That causes Tether prices to go above $1, not massively above, $1 and 25 basis points or something. And then you'll see market makers go and basically create Tether and sell it to meet that demand. And that will happen on exchange. It'll happen on FTX, on Binance, on Huobi, OKX, Bitfinex, Kraken, Coinbase, and a number of other exchanges. And you'll see market prices sort of equilibrate between them because of arbitrage. So, because we don't touch the RMB ourselves, I don't know for sure how much I can speculate about this, right? I can speculate about, and I would guess that some of this is coming from China. That would be my strong suspicion. I don't know that for sure. I know not all of it is. I would also say that doesn't mean that the actual creations of Tether are coming from China, right? That might be secondary market purchases, for Bitcoin or for other things. When you look at the RMB on-ramps, the public well-known ones have been the ones on the Chinese crypto exchanges. So, and some of these have been shut down recently, but historically, most Chinese crypto exchanges have had RMB to Tether markets. Huobi, OKX, Binance, ZB, Gate, all of these had places, often for limited size, often only peer-to-peer, negotiated over WeChat or Alipay, where users could send RMB to each other in exchange for Tether. And at least in many cases, at least at many points in time, this has been effectively allowed by the Chinese government as long as it was monitored and peer-to-peer rather than centrally cleared by the exchanges. I can't speak to necessarily the future of that, but that certainly has been one place where the on-ramps have come. I think OTC desks that transact in RMB is likely another one.
Sam, two quick final questions. One, someone argued that this is kind of a tense time to be a global cryptocurrency exchange when we look at what's happening to Binance. Binance has kind of been the target of a string of regulatory actions around the world. So I'm just curious, what you think about what's happening to Binance. Do you think it's fair? And do you think it has any implications for FTX?
Yeah, it's an interesting question. I've sort of gone back and forth about the question of fairness, and it's a tough question. And I do want to sort of contrast it to what we saw with some other, there have been some cases where there's a party that just didn't have an AML KYC framework at all. And it was just clear how that was going to end. That was just so far outside of compliance. And that's not the cases that we're seeing primarily today. And again, I don't know for sure. I'm not involved in competition with regulators and other parties. But if I had to speculate here, I would guess that a lot of this comes down to the attitude and the approach and the communication that parties are doing with regulators, that a lot of this comes from whether regulators feel frustrated or feel comfortable dealing with the counterparty, comes to whether there is sort of responsiveness in, to requests. We try to be as responsive as we can. I think that goes a long way. There are a lot of cases where regulators are still figuring out or still trying to figure out how to phrase what they want. You'll see this sometimes explicitly written down, where a regulator will say, we don't know what our policy is here yet. It's unregulated. We will get to this later. But in a lot of other cases, you'll see clarity start to come out. The United Kingdom is one good example of this. late last year, they announced they did not want retail traders accessing leverage on crypto products. They made that announcement. We shortly thereafter implemented a standard test on FTX for that, so that UK-based users who are retail cannot access leverage now on anything on FTX. And I don't want to make too much hay out of that one specific case, but I think it is a sort of typical example of what is a broader phenomenon. We're in this messy global regulatory environment. A lot of this comes down to, again, not just one headline policy of are you doing the compliant thing or the non-compliant thing, but a very large number of small policies and small decisions, and small amounts of communication and responsiveness, and making it clear to regulators that you will be compliant, that you will apply for licenses when you can, and that you will respond to their requests when they have them. And I think if you're not doing that, that's when you start getting into territory where they feel less comfortable, and they feel that whenever you do something they didn't want, that sort of their only recourse is to publicly condemn.
Sam, one sort of final thing, just back to the raise. So it's definitely remarkable that you've raised almost $1 billion in, what a lot of people are calling a bear market. How much of this is due to just kind of like your force of personality, right? I mean, you're sort of like always on TV, you're hanging out with Tom Brady. Like, I'm just curious, how much do you think that is a factor in you successfully raising so much money?
Yeah, it is. I mean, yeah, it is.
Okay.
I don't think all.
But you get a proper bed for your office.
I mean, sort of, not exactly a bed. It's a couple of beanbags.
Yeah. Legendary. All right, Sam. Thank you for coming on to the show. Appreciate your time and congratulations on the raise.
Thank you, guys.
That was Sam Bankman-Fried, CEO of crypto exchange FTX, quant training firm Alameda Research, and co-founder of Project Serum. Coming up, checking in on Asia with the daily forecast. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is currently trading at 32,106. Bitcoin is up almost 2% over the past 24 hours, and the CoinDesk Ether price ETX index at 1996, now dipping below that $2,000 mark. But ETH is still up over 5% for the day, and the new DFX, CoinDesk's DeFi index, right now at $441. DeFi is up about 3.5% over the past 24 hours. Time now for the daily forecast. And update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, July 22nd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, China's Ping An Insurance joins trials of the digital yuan. Core Scientific to go public via SPAC to expand mining for crypto. And China tries out blockchain in the shipping industry to speed up deliveries. Let's get you up to speed from Asia to the world. We're starting to see digital currency in China's insurance markets. China's Ping An has joined the country's E-CNY trials by allowing its use as payment for insurance policies. Now, Ping An is one of China's biggest insurers, and it's offering policies to medical staff in the eastern coastal city of Shenzhen. And an extra incentive is to use E-CNY. Now, the policies include payouts for illness with 50,000 renminbi, or almost $8,000 paid out for holders confirmed with COVID, or 300,000 renminbi, or around $46,000 in compensation should they pass away from COVID-19. In order to encourage people to try using the digital currency, discounts are actually being offered for those who choose to pay using the digital wallet in China. Meanwhile, the crypto mining industry is getting a boost. Crypto miner Core Scientific is going public on NASDAQ via a SPAC listing, merging with Power and Digital Infrastructure Acquisition Corporation, or XPDI. Now, the deal with the Special Purpose Acquisition Company, better known as SPACs, is subject to the approval of shareholders and values the combined company at around $4.3 billion US dollars. Core Scientific plans to raise $300 million US dollars in net proceeds and plans to spend it on mining equipment and infrastructure build-outs. One of the investors, Celsius. It invested $200 million US dollars in Core Scientific, Rhodium, and Luxor last month, and CEO Alex Mashinsky told me that the deal is great for the investor ecosystem.
It obviously is phenomenal news, not just for Celsius, but also to our entire community, because their investment is doing very well. With Core or with Rhodium or with other companies, that is a guaranteed source of Bitcoin. So that we don't care what happens on exchanges or DeFi or institutions. If we have a factory that every 10 minutes prints 6.25 Bitcoin.
It's not yet clear when trading will begin, but as more mining rigs leave China, we can expect more mainstream exposure as miners set up shop in communities in the West. And on to the markets today, Bitcoin up just over 4% at a little over 32,000 US dollars. That's as of 4 p.m. local Hong Kong time at the end of what was a risk-on day for investors in Asia. And in the top 10 for cryptocurrencies, Dogecoin up just over 8%, and Ethereum extended its climb after Elon Musk confirmed that he holds ETH, up almost 7% during Asia hours. And could we soon see faster shipping times thanks to blockchain? The shipping industry is getting a blockchain makeover, you could say, and we'll see time spent in ports dramatically reduced with the rollout of a blockchain-based cargo release system. Developed by the Global Shipping Business Network, or GSBN, is designed to enhance efficiency. Now, there's a lot of paperwork in shipping, and the new blockchain-based system, simply called cargo release, replaces what has been a laborious process, which depends on a lot of people manually filling out vast amounts of paperwork. Instead, it will all be digitized, the shipping supply chain from end to end on blockchain, allowing cargo to be released at its destination, paper-free. GSBN, a consortium which was founded by a group of 8 global shipping lines and terminal operators to build data infrastructure, says this could solve the disruption the industry is currently facing from a lack of equipment in the right places.
The supply chain itself actually is really overextended. So introducing new technologies such as blockchain and changing the way the shipping line and terminal are operating, providing more transparency, getting better information, will actually remove some of the constraint and hopefully bring better service, better experience for the users.
GSBN says the system can reduce the turnaround from days to just hours. And that is the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Paxos, the crypto infrastructure firm behind PayPal and other services, revealing a breakdown of the reserves backing its stablecoins Pax and BUSD for the first time. Some 96% of the reserves were held in cash and cash equivalents, while 4% were invested in U.S. Treasury bills as of June 30th. Joining us now is Paxos Chief Compliance Officer and General Counsel Dan Burstein. Welcome to the show, Dan. So, curious off the bat, why did Paxos feel a need at this time to make these disclosures?
Well, thank you for having me back. I appreciate being here. The important thing right now is that there's a lot of discussion at this point on stablecoins and stablecoin reserves. There's a regulatory discussion that's going on in Washington that's really important. And there was the announcement the day before yesterday about Circle's reserves. And so that's important for the timing here. and the sort of fever pitch of discussion is makes it relevant to release this.
Makes sense. You guys want to develop trust, and regulators are increasingly, policymakers are increasingly talking about it. So you have 96% cash and cash equivalents, 4% in U.S. Treasury bills. Compare that to Tether, the largest stablecoin issuer, with about 2/3 of their reserves in commercial paper. Why is Paxos not holding it in commercial paper?
Sure. Well, let's just break down what a stablecoin is. I know your watchers and viewers are sophisticated here, but a stablecoin at its essence, and a dollar-backed stablecoin in particular, is a digital token that is backed by a dollar. It sounds simple enough, but what that means is when a user, when a customer sends Paxos $1, we issue them one Pax token or one BUSD token, which is a stablecoin. They then expect us to hold that dollar and to keep it in a very safe, liquid, accessible asset in order to be able to honor a redemption for whenever that stablecoin comes back to us. We're going to give them that dollar back. And that's the most important thing to know. That's the most important thing about a stablecoin, is that that dollar is going to be there at the end of the day. And so when you compare Paxos and our reserves that are strictly in cash or very short maturity U.S. Treasury bills, that means that those dollars are extremely liquid. And you compare that to another so-called stablecoin, whether it's Tether or USDC, that's backed by a basket of assets. Is that really a stablecoin if it's not really backed by a dollar?
So, Dan, what would you call them, first of all? Second of all, obviously they're competitors of yours, but putting on a regulatory hat, if you will, what do you think regulators are doing right now when they look at USDC's balance sheet? You flagged, for instance, the idea that maybe USDC might be viewing the tokens as a form of liability or some sort of property. What are the regulators doing right now as they look at this? What do you think is going through their heads?
Sure. Well, it's a good question, Lawrence. And regulators are not just one thing. And there are different baskets of regulators. And there are prudential regulators, like Paxos is a New York State registered and licensed and chartered trust company since 2015. A trust company has bank-like supervision and is chartered by the New York State Department of Financial Services. It also means that all of our products and services are regulated and are overseen by our regulator. And the prudential regulator is looking for a few things, including safety and soundness of the financial system and consumer protection. And they're looking at things that are not just the good times, but the bad times. What happens if there's a run on the asset? What happens if there is a massive amount of redemptions? Are those dollars going to be there? And so prudential regulators are certainly going to be looking at reserves and saying, are those going to be able to be liquidated at par on a very short-term basis in an adverse scenario? On the other hand, there are also securities regulators, and we saw yesterday some comments from Chairman Gensler at the SEC about looking at the assets that underlie stablecoins and so-called stablecoins. And we are seeing that I think we're going to see more attention to this space.
So there's been a lot of talk recently about like this kind of potential stablecoin apocalypse, right? Where like we find out that these stablecoins are not backed as they say they are, and how this could affect the crypto markets and even lead into just like wider financial markets. I was wondering if you could just sort of like game this out for us. Like what's the worst thing that could actually happen, and like how would that happen? Because I think it would be good for viewers to sort of visualize what can happen if these stablecoins are not backed as they appear to be.
Sure, and it's not my intention to be the sky is falling kind of person, but that's what regulation is, and that's what financial regulators need to look at and are looking at is the worst case scenario, the adverse scenario, and the different likelihoods of those scenarios, and then assessing risk. When you have tokens that are not regulated, that means that there are no regulators who are looking at that and who are not looking out for those worst case scenarios. But the worst case scenario, I think, is clearly a run on assets. If there's a run on redemptions and they're in an adverse economy, for example, and especially if there's a lack of confidence in the token, which could certainly happen at any time. What you could see is a fire sale of the underlying assets, and if those assets are held in illiquid assets or risky assets, then those might not be able to be sold for $1, and those tokens are then going to be under reserved. They're going to break the buck, and they're not really entitled to the name of stablecoins.
But what could happen? Like, how would that bleed into the financial markets in that scenario?
Certainly, and this is not necessarily my area of expertise, but if you're holding a token that you believe to be worth $1, and then it is not worth $1, and you can't get $1 for it, then that can have multiple adverse effects in terms of various financial markets that use stablecoins.
So Dan, you mentioned BUSD. That's of course Binance USD, and SBF was on just before talking about on ramps for Tether users in China. Buying Tether potentially off, using those exchanges. So have you talked to Binance and said, look, Tether's on the exchange. Why are you guys using them and not just solely us? I mean, has Paxos talked to Binance about potentially even delisting Tether, or any concerns, given especially what's happening to Binance now all over the globe?
Sure. We haven't talked to Binance about this. What we have seen is that Binance is an important partner for us on BUSD. In the case of BUSD, which is the Binance dollar, Paxos is the financial services provider. We have this as a regulated token approved by the New York Department of Financial Services, the same as Pax. Binance is a white label partner and is our branding and marketing partner. We value the relationship with Binance, and they of course have a much broader business than just BUSD. But I do note that CZ posted a tweet last night talking about BUSD and talking about the importance of stable reserves. And I think, as with all market participants, Binance can and should be looking at the stability of those reserves and whether Tether and USDC should and could be called stablecoins.
Is there any risk that the regulatory scrutiny that Binance is under could affect the success of BUSD?
I don't think so. I mean, I think that we believe that Binance has really a strong way forward. Binance, as I said, is an important partner to us, and has committed to resolving some of their legacy issues. But we have a lot of confidence in Binance's ability to get past what's a wide perception that they have some legacy issues, and to move forward in a really constructive manner.
So Dan, obviously, commercial paper, the two words that everyone's talking about now in stablecoins. Where do you think, given some of the answers that Tether has given in the past 24 hours to, for instance, CNBC about where their commercial paper is and isn't, where do you suppose that it is? What have you guys heard? And in terms of Circle, do you think that they hold more commercial paper in what they're counting as cash and cash equivalents than they're letting on?
Well, I haven't seen the breakdown or what's behind the scenes. I think what we did hear from the Tether executives yesterday is that their commercial paper is being held in a non-transparent way. And in Circle, if there are certain categories of funds in those cash and cash equivalents category that are not being transparently disclosed, then I think we would like to see that transparency. But transparency is not enough here. Lawrence, if you tell me that you steal a car, it's great that you were being transparent, but it doesn't absolve you of the underlying activity.
What are you saying,
Dan? And so what I'm saying is that the substance of the disclosure is important, and what's important is for a stablecoin to be one-to-one backed by actual dollars, in order to be a dollar-backed stablecoin and to be regulated so that there's somebody looking over your shoulder to verify to consumers and verify to the community that that one-to-one backing is there, and that that there are resolution plans, and that the token is being governed and managed in a way that's extremely responsible.
Dan?
Just one quick question. Do you think the Fed is going to issue a digital dollar, and do you think that's a good idea?
Yes and yes, although it depends on what it looks like. I think there are a lot of different ways to do a digital dollar, account-based or token-based, and distributed through private networks or through the public. And I think there's a lot of design decisions that are going to make for an interesting conversation in the months and years to come.
Dan, well spoken. Thanks for the explainer to our audience, and as well as the transparency that you are sharing with us as well.
Thanks for having me back. Happy birthday, Jack.
That was Paxos Chief Compliance Officer and General Counsel Dan Burstein. Time now to check in with Crypto Twitter with our tweet of the day. This one from Dr. Parik Patel, parody investor account, tweeting the 4 horsemen of the apocalypse. We've got Jack Dorsey with the beard, Elon Musk, Kathy Wood, and Steve Lee, the moderator. This was a favorite from Lawrence. So Lawrence, this one's for you. All right. That is First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.